So I've got a great friend of mine. It's Cuco Heredia of now Economic Strategic Partners, formerly Texas Credit Group. And Cuco is in the business of business lending and things that go around starting a business. And we're going to touch in terms of a few topics that are really, really important to make sure that your business gets started on the right foot. And if not, Cuco can come in and help get things arranged to make sure that you are in good standing moving forward and using all of the strategies that he has learned throughout the years to make sure you are as profitable as can be. So Cuco, thank you for helping me out today. How are you?
Doing good. Thank you very much. And I apologize. I'll wear a hat more often because I haven't had a haircut in a while. So don't want to scare people.
I think most people can kind of figure out that this is around the 2020 that we're doing this interview. So no one has had a haircut for a while. So Cuco, let's get...
I even forgot to shave today.
So. Well, here, let's get started with this. I know when we first connected, you were talking to me in terms of something that you called a business credit profile. Can you expand on what that is? And are you telling me that like it has nothing to do with my personal credit?
It does at the beginning, and there's some people that that would come in and say, "Hey, I want to borrow solely on my business." But if there's no business history, it's kind of like getting a co-signer. It's kind of like you turn 16, you want to buy your first car, you just started working 6 weeks ago. Most likely you're going to have a co-signer, right? Your parents or one of your relatives, whatever. You need a co-signer. So when you're starting a business, that co-signer is your personal credit profile. That is going to be your co-signer because you've shown history with your personal credit. And there's a few lines of credit out there that are really good for businesses, not just for getting a significant amount of money, but the terms can be very good, very favorable. But it is guaranteed by your personal, but it doesn't report to your personal in most cases. So you don't see these debt to income ratios that people happen to go and explain when they're trying to buy a home. And they say that it looks like you have all this debt. In reality, the business is paying for it, and you have to explain that letter of explanations, or sometimes that needs to be off the credit report, or they won't approve you. So it just depends on those lending guidelines. But that's a key. I see contamination on the personal credit, especially credit cards. You go and get at your local bank. They say, yeah, this is for the business, has the business name and everything, but it's reporting to your personal. And the reason we want to separate that first and foremost because it affects your scores quite a bit. If you max out that credit card, you max out several credit cards to run your business and you pay it off. But when they pull the report or when it updates, what if you're maxed out? I've seen files where maxed out credit cards, it cost them 150, 180 plus points on their credit score with not a single blemish on the personal credit profile. So if you can imagine, you're using your business credit cards, supposedly business credit cards, but reporting to your personal, use them every month and pay them off every month. There's a time they report. What if it reports and updates when it's maxed out? You're looking in the low 600s, probably below the 600s, when in reality you should be in the mid to high 700s credit scores. So that's the very first thing you want to do, separate that. So it is, if you're just starting a business, it wants a cosigner, but it won't be reporting to the cosigner. So it's like your personal credit is your cosigner. So personal credit is vital. Business owners come to us all the time and they say, hey, I need to fix my personal credit. Why is that? Oh, I have a business. I need to fund projects, 6-7 figure projects. And the issue is the personal credit.
Okay. So if I'm hearing you, so if I'm hearing you correctly, really step one is make sure that the business expenses are for the business, the personal expenses are for personal, and then even if you have to get a low limit credit card to begin with because they're looking at your personal history, get a business credit card and make sure that everything is running through a business credit card.
Yes, and where you get them, it's also very important. There's a few companies out there, the few companies that we use where they do their credit card, what they call credit card stacking program. So you can go out there and get 3, 4, 5, 6 credit cards all in one cycle. And the good news is that it reports to the business credit profile in most cases. So it really depends on how strong your personal credit is. So if you got 5 credit cards reporting to your business credit and they're all reporting to 3 bureaus, that's 15 bureaus, right? 15 experiences. And that's where you want to break that 10 experience threshold. You want experiences. That's what they want to see. It's a credit score. It's not a cash score. They want to see that you've used credit and you can pay back, because that's where your score comes from, is payment history. On the business side is payment history. That's all they want to see. Do you pay on time, or do you even pay before? That's also a major factor too. But how are you going to show all these payment histories if you don't have anything reporting to the business credit profiles?
So,
Dun and Bradstreet, Experian Business, and Equifax Business.
so from like with a personal FICO score, they say like the age of the credit cards that you have, if you've paid on time, and I know there's a few other things in there, but you're saying from the business side, to make a good business credit score, business credit profile, it's just how many transactions have you done? That's it?
Payment history. Yeah, the payment history. And it's a lot quicker to build up your business credit profile. You can build it 10 times faster than you could in your personal. But there's also 10 times more money, 100 times more money available on your business than there ever could be on your personal. And I see a lot of people calling us for credit repair, which is foundation to your full financial health. But the reason they're calling us is because, hey, I need to fund a $3 million project. Well, your personal credit is not going to do it. They want to see your business history. We can even dive deep as getting into their business credit profile and finding any issues, and we work on some business repair issues, because you can damage your business credit too, on your personal. And if you've been in business a while, you've done transactions, whether it was in your business or not, if you had defaults, those could pop up, or any blemishes like that. So personal credit, it's tied to your whole financial health, the potential growth for your business. Business owners miss opportunities because they don't have the working capital. I had a client that missed out on a $750,000 job because he was maxed out on all the jobs. He used up all his capital for all his jobs, and he needed about another 200,000 to 300,000 for the next job to run it. And it was like it was about $750,000 project. So they were maxed out, and they didn't even have a business credit profile. The personal credit profile wasn't that good either. But those are missed opportunities. So we want to prepare business owners to have it and not need it, and not to be somebody that needs it and not be able to have it, because it takes a little bit, right? It's not like, hey, let's build your credit profile today, next week you're fundable up to the 6-7 figures. It takes a little bit. It's a lot faster, but you want to have it and not need it than need it and not have it.
Okay. Yeah. So with a FICO score, personal credit score, it goes from, I think they said as low as 300 up to 850. Is that the same thing with a business score?
No, that's not. The scores, there's different scoring systems. The ones that I've been around the most, and the ones that I see the most, is from 0 to 100. So it's a little bit easier for people to understand. Because people are like, hey, I have a 600 credit score. Is that good or bad? Well, depends on which range. Are you looking at a FICO score, or are you looking at a consumer score, whose range is up to 950, right? So, but in the business scores, it's like you're either an A, B, C, or D student, right? Or even an F. That's kind of the range. And then you want to get to 90 and above. You want to get to 90 and above. And the fastest way to get there is, how many accounts do you have? Do you been paying on time? Are you paying early? How you pay is also very important. Not just paying on time, it's even paying before. It kind of accelerates the growth of your credit scores a little bit quicker if you pay before it's even due. It's like you said, yeah. There's 5 factors that affect your personal credit score. One factor that affects your business is payment history. How do you pay? How many accounts have you paid? Are you paying on time? Are you paying early? Like that example I mentioned, it's kind of like that. very strict employer or your boss or your manager say, hey, if you are early, you're on time. If you're on time, you're late. And if you're late, you're fired. Kind of use the same mentality. Like if you're on time, you're late. So it looks okay. But if you pay before it's due, if you're early, it looks even better. You're they look at you as a not necessarily a better employee, but a motivated employee that has goals. And that's the same way they look at business credit profiles too.
Okay. Now, let's just say that I'm starting a brand new business. I'm trying to keep my costs as low as possible, you know, and so I'm starting the business out of my house, out of my personal address. Is that going to be an issue because it's not a quote unquote business location?
Not necessarily, but when you start getting, if you have big goals, big dreams, go ahead and start it on the commercial. And another thing too, depending on what you do, you don't want your home address as your business. You don't, especially depending on the kind of industry you're in. I know a few jewelry designers that are their business is their home address. To me, I'd be afraid for people to know that I have fine jewelry in my home studio, right? So that's one of the things that like I don't want my home address to have my to be my commercial address. But yeah, it's they want to look at how legit you are. Another thing they want to look at too, especially when you start asking for different types of loans, they want to make sure that your business phone is listed on 411 on the business listing, right? They look at that, so they'll do their due diligence. They don't want to see a cell phone, even though cell phone's fine, even though it's the way we go. But there's a lot of voice over internet services out there. There's what, 15, 20 bucks a month that can be listed as business, can be registered under the address that you have for your business, and it doesn't have to be too expensive either.
Kuko, you just
So the business address, sorry about that. And obviously quarantine times, and I cannot hide from my kids.
It's all good.
So business address, you want to have it because it makes you more legit. The phone numbers, you want to be able to list it up 411 business listing. That makes you more legit. And there's some lenders that do look at that, and they'll go research websites. They want to see a legit website. It just depends on what level you are at the kind of lending that you need for your business growth. But at the beginning, you're fine. I mean, you can go to business and get a few lines of credit, but it depends on how advanced your business is, how big you want to be. Go ahead and get that in order when you want to see that history.
Okay. So I know you guys call yourselves economic strategic partners because, you know, it starts with the core foundation of getting the business stuff right. But, you know, I know that there's kind of three other key factors that you look at. You know, we talked about the business credit profile, and you've kind of touched in terms of credit repair. This separating out personal and business, I'm guessing, is going to improve people's personal scores like instantly.
Yeah. So I've seen that happen. There's a little catch-22. A very good example. I had the catch-22 where, and this gentleman had $100,000 in personal credit maxed out. You know, they were in the mid 500s, and no blemishes. They needed a loan for the business, but since the business had no business history, they want to see the scores at least close to 700. So he didn't have the cash to pay the $100,000 off in credit cards, or at least down to 19%, right? Down to 19,000. He didn't have the cash to do that. So, but his scores were low because of that, but the business wants the higher scores to fund it. So unfortunately, he had to do a higher risk loan, which means higher interest. We got a short-term loan, paid off the credit cards, about 45 to 60 days. The scores just shot up because they had no blemishes. They had great history. And as soon as they reported under 19% of the available credit for revolving interest, his scores got up in the high 700s. So now we're able to fund a loan that he wanted to a better term loan. and I cannot remember what it was, but I believe it's a 5-year term loan that he needed, not a 12-month term high interest rate. But that's what we had to do. So we have solutions. We have so we see the connection and the people's financial circle of life. It's not like, hey, let's put you on this loan, goodbye, see you next time you need another this type of loan. That was a bridge to get him what he really wanted. So we're able to work with that because we understand every aspect of personal business, credit, structure, repairing issues. Because at the end of the day, we don't want people to have those short-term, high-interest loans, daily or weekly loans. We want you to get the best type of loan. And if you don't qualify for that now, let's find out why. What's the problem? What are the underwriters coming back at? What are they showing that they denied you for? Let's fix that problem. So that's why we talk about when we do our analysis, we call it the full financial circle of life because everything's connected. Everything's connected. The more money it's not how much you make, it's how much you keep. And we work and we strive to find ways to keep that money, whether it's directly through us or our strategic partners that specialize in certain areas. But at the end of the day, we want you to keep as much of your hard-earned money as possible.
Got it. So to kind of sum this all up in terms of what PUCO and ESP do is they make your business look like a business, look in good standing, so that you can then get better rates when it comes to auto insurance, loans, and you do loans of all shapes and sizes in all 50 states, correct?
Yes, we do. We're even able to raise capital to help businesses go public. And not alone, but let's say you have a great business, a great idea, we can raise capital, and depending on how the investor pool comes in, you can pay out dividends quarterly or however you decide to run your business, but you can raise up to, let's say, $50 million to go big time. And you don't have to worry about a $50 million loan payment back. So yeah, so every aspect of the business world, wealth transfer, asset protection, once you build this bigger and bigger business, there's higher and higher risk, right? This is a very litigious society. Everybody wants to sue everybody. And we have a saying in our with the tax team, my tax team that handles this, there's a saying there, what LLC stands for. LLC stands for large lawsuit coming. Yeah, so because it's going to happen, it's inevitable. And yeah, there's limited liability, and people think you're 100% protected, and you're really not. So we teach, we guide our clients, we have our attorneys and our enrolled IRS agents that help separate, true separation of title. So you want to separate title, minimize liability, and transfer wealth for the next generation. We help structure businesses in a way that ends up being a generational wealth transfer, minimize taxes on those transfers, because like Rockefeller said, it's not how much you make, it's to own nothing and control everything, because at the end of the day, it's not how much you make, it's how much you keep. You want to keep it, but it's all about structure. Like in real estate, it's about location, location, location. When it comes to taxes and keeping most of your money, it's all about structure, structure, structure. And so we have a highly specialized team that can come in there, do a clean sweep, and hopefully find you a lot of more money to keep. More money you keep, how hard is that money you keep working for you? So we help on that aspect too. It's like, now you're saving this kind of money, put it in the right places. Put it in the places where you don't have to wait for 2.5 times your salary for your business to survive. Depend on yourself. Don't depend on anybody else, because if you understand the rules, just like any game, if you don't know the rules, how are you going to win? And this is where a lot of small business, unfortunately, small and mid-sized businesses are losing. It's vital to the economy, it's vital to this country, and we want to educate our people that you should be rewarded for your hard work, not be one of the highest taxed brackets because of your success. You get penalized for success, a business owner, if you don't know the rules.
Kuko, where can people find you?
They can look us up on economicstrategicpartners.com. And on there, they can request a consultation. We usually request, we ask them, hey, tell us what you want to talk about, because we have highly specialized team, large team, then we want to make sure it's the right department that's reaching out to you, even though they're all connected, we want to make sure that what your main concern is, and then we'll reverse engineer and find out what the problem is, and fix those problems too.
Well, I really appreciate your time today, and I think you gave a ton of information, and I think people will be really appreciative of the guidance that you can give them. So thank you.
Thank you very much, and apologize for the quarantine outfit.
No problem.
All right, have a good one.
Thanks.